Hey, Roberto.
Hello, Jamili. How are you doing?
Hey, I'm doing great. How are you?
Can you hear me?
Yes, loud and clear.
Awesome.
Awesome, great. So, Roberto, we are live today. I'll just give you a very short introduction to the audience, and then we can get started with the session.
Awesome. Yep.
Awesome. Hello, everyone. Thank you so much for coming today for our very first international chapter launch event. For the first session, we have Roberto today. He is the managing director for Microsoft for Startups in the Middle East region. And Roberto, once again, thank you so much for being on board as a speaker. It's actually great to host you today. And I leave the stage up to you. And if you face any difficulties, just put it on chat. One of the organizers will pick it up. To the audience, if you have any questions, put it on the Q&A section. And towards the end of the session, we'll be bringing you on board to the stage.
Awesome. Thank you so much, Jamili. Thank you also, Shadna, for inviting me or organizing this great launch event for SaaS Insider MENA. My name is Roberto. I'm the managing director for Microsoft for Startups across Middle East and Africa. My background is in tech. I've been working in tech companies a long time at Google before Microsoft. Joined Microsoft 2 years ago to launch Microsoft for Startups and help founders, entrepreneurs across the Middle East and Africa region to build the products. We focus a lot on B2B SaaS and to go to market and to develop their businesses from here. Very recently, actually, and this is very timely, actually, the launch of SaaS Insider MENA. Very recently, we partnered with WAMDA, one of the largest VC capital firms here in the UAE and in the region, and with Subsbase, which is a subscription-based SaaS, B2B SaaS company from Egypt, to launch an industry report about the state of subscription-based businesses across the MENA region. Needless to say, digitization has become the mainstay of the coronavirus pandemic, shifting both consumer and business behavior. And amid this trend, the subscriptions economy has boomed, offering its users convenience and reliability. So globally, the subscriptions economy has remained resilient, benefiting from the pandemic and the ongoing lockdowns in various parts of the world. According to Zuora, 50% of all subscription companies are growing just as fast as they were before the pandemic, while 18% are seeing subscriber growth rates accelerate. Regionally, here in the MENA region, the boom in e-commerce and improvements in the digital payments infrastructure has helped the subscriptions economy grow in tandem, right? So that's why we decided to launch this industry report with WAMDA and Subspace to understand a little bit better the subscription-based business in the region. And the findings that we got highlighted unique challenges of the sector, consumer preferences, and the areas of growth. So more than 70%, of the companies we surveyed are in the pre-seed and seed stage, highlighting the nascent nature of the subscription economy in the MENA region. The majority of subscription businesses are based in the UAE, in Egypt and Saudi Arabia, countries with strong e-commerce markets and more advanced B2B ecosystems for sure. Most of the new subscriptions business set to emerge over the next few months will also be based in these three countries, alongside Jordan, which has a robust developer ecosystem. If we focus on the main challenges that we have been experiencing in the ecosystem, traditionally, collecting payments and managing subscribers has been a major challenge. In economies with advanced digital payments infrastructures, these issues have largely been resolved. But in the Middle East, however, where large segments of the population remain unbanked and cash on delivery continues to dominate, businesses have faced bigger hurdles in this regard. This is why the B2B software as a service SaaS segment dominates in MENA, accounting for 50% of all subscription-based offerings. The pandemic's push towards remote and working from home policies have also helped the B2B segment, with tools from Microsoft and Zoom attracting greater numbers of subscribers. And going forward, we expect a rise in the number of subscriptions businesses in healthcare, entertainment, and e-commerce. Another major challenge is the lack of education in the market, which affects both the B2B and B2C segment. Consumers are also reluctant to auto-pay. There is a lack of trust in paying upfront for a product or service, and the lack of digital payments infrastructure in many countries is also holding back the B2C segment. But there are signs that this is changing. The strict lockdowns across the region prompted many to turn to online services and helped to increase consumer trust in online payments. So this has helped the regional companies like Anghami, for example, or Shahid, grow, and their growth has also helped educate the wider market, which is really great to see. So if we look ahead, the rise of e-commerce and improvements in local logistics is also pushing the growth of subscription-based boxes planning to launch in the next 6 months. These offline boxes are also increasing demand for regional payment gateways and subscriber management platforms like Payfort, Fori, Hyperpay, for example, to name a few of the most relevant here in the MENA region. One way to overcome the challenge of digital payments is also through direct mobile billing. For example, Anghami's users can pay for the music streaming service through their mobile phone operator. Another payment option that is gaining steady growth is buy now, pay later solutions. We saw a flourishing of these solutions, namely Tabi and Spoti, for example, here only in the UAE, which can help to alleviate some of the reluctance that consumers have towards autopay. In MENA, close to 30% of the subscriptions offering cost between $1 to $10 per month, with more than half of the businesses we surveyed saying that they had fewer than 1,000 active monthly users. So in any market, it's more about people understanding what is the ongoing service that they're getting. And from the business side, the subscriptions model gives businesses a better chance to survive. For businesses, a subscription model provides a steady, predictable stream of income, benefiting their cash flow. And with the ongoing impact of the pandemic, accelerated digitization that we see here in the region, we are likely to see the subscription economy continue to grow across the broader Middle East and North Africa region. That's why also as Microsoft for Startups, we have been focusing a lot on this segment. And when we launched our operations here a couple of years ago, we put as our value proposition, and our mission is bridging the gap between corporates and B2B startups, right? So what we do as Microsoft for Startups, we have a value proposition that goes beyond just giving credits to startup, and we focus around different pillars. One pillar is technology enablement. So on one hand, we help startups, especially B2B SaaS companies, to build their product on the cloud, right? So we provide the credits and licenses to build on Microsoft technology. But at the same time, we also provide guidance and advisory on building the right architecture, how to SaaSify your product, how to go to market, how to think about the scalability of the tech stack, how to think about integrations with third-party services, whether they are payment gateways, but also other third-party apps that would be part of the architecture that startups that are working with us are building. So technology doesn't limit only to giving credits or locking startups into a Microsoft environment. It also comes with support for migration, support for building architecture, support for building architecture that can scale and integrate and be open in their infrastructure. The second pillar we focus on is the go-to-market. We shared in the introduction a little bit more about how we see the go-to-market landscape evolving in the MENA region. We saw, some good sign, some challenges that we're facing, but also looking ahead, some good sign of great development that we can expect in the ecosystem. That's why where we want to differentiate is exactly in the go-to-market, because we built a sort of a journey where we can onboard B2B SaaS companies too. And the aim is to take SaaS companies that are market ready and to turn them into being more enterprise ready. So basically what we do is when we onboard startups into our programs, when we focus on go-to-market, we try to take the startups to be enterprise ready, which means that we focus a lot on the go-to-market strategy, on the pricing strategy, on the SaaS component of the business model, and also on how to becoming more appealing to selling to corporates and enterprises, right? So we do that through skilling and education, when it comes to building the business model, the go-to-market, but we do that also operationally with sitting down with the B2B SaaS companies and developing a roadmap with each of them. So what we do is we design the go-to-market strategy. We try to understand what are the channels that the B2B SaaS company is trying to sell to. Usually we try to onboard the B2B SaaS companies onto the Microsoft Marketplace. Microsoft Marketplace is a marketplace that gives access to more than 100 million buyers globally. So that is an opportunity for B2B SaaS companies to start testing the waters also in markets where you might not have necessarily a business development presence or a sales team, right? So, and also I would say in a region like the MENA region, the beauty of the marketplace is that it can help mitigate the friction that we see across different countries in the region. The MENA region is not one region per se. There are a lot of different countries with different regulations. So sometimes tapping in some of these countries, the scale doesn't happen immediately, right? So The marketplace, giving access to this amount of buyers globally, offers tools to provide trials, for example, for customers, build your own license, but also becoming transactable. And also it's a way for Microsoft to vet the solutions from a technical and go-to-market perspective, so that we can really then focus on solutions that will be more enterprise ready. So for the B2B SaaS companies that join the marketplace journey, basically you can get to a stage where you turn being into a partner with Microsoft. And if you get to that stage, basically you unlock even more value, because if you become what we call a co-sell ready B2B SaaS startup, basically your IP will become something that we will also be able to co-sell together. So our sales teams, if field sellers, if you're selling to large enterprises, or Microsoft partners, if you're selling through the channel, will be your extended sales teams to help you closing deals between you and the corporates, right? So because they have a sales incentive that they can retire quota by doing that. So for us, this is the second pillar. Go-to-market is really strategic, is a very high area of focus where we aim to differentiate, because we see there is real value, economic value in terms of dollars attached to transactions, deals that we can help startups generate with our corporate clients or customers, large enterprises. Then we also help startups on investor readiness. Whenever startups are going for their next round of funding, what we do usually is a few different things. One is working with the startups to define their strategy to approach the right investors, and not just have cold calls. So review their investor deck, understand which investors are relevant according to the industry that they are in, doing meaningful introduction. We also host quarterly investor demo days. And eventually, if the solution fits into a certain number of criteria that our venture arm M12 has, we might as well be able to make some relevant introductions to our colleagues at M12 in the US. And finally, there is a community aspect that we are nurturing, because we believe that there is a lot of learnings and takeaways that funders can share with other funders, right? So we have great funders already joining the program. We have a community of 350 active startups only in the Middle East region, plus other 200 across Africa region. And we believe that by nurturing the community, we have funders that have been going through a number of challenges specifically to this region. And they have a lot of lessons and takeaways we can share with other funders, right? So we believe part of our mission is also to democratize access to this knowledge, to nurture and build this community, to give visibility as well to stories that are great stories from the region. An example, we recently had the pleasure to host our president, Microsoft EMEA, Ralph Oppert, here in the UAE. And we were able to have a session with him where we introduced two startups. One of them is a B2B SaaS model in logistics industry. And, by this meeting, this startup has been able to benefit his network, right? The network of our president, because he's been working a lot in Asia. He was the president of Microsoft APAC. So introducing them to relevant clients for them in Singapore, in Nigeria, in Amsterdam, and help them to go more international at a time where they're expanding internationally, right? So these are also efforts and initiatives that are part of the community that we want to nurture and are very important for us. Globally, we surpassed the $1 billion pipeline in revenues that our co-sell ready startups have generated in terms of deals and pipeline with corporates. So we really see that there is a real value, real economic value with dollars attached to it, to this commercial and go-to-market aspect, on top of nurturing startup to build great products on Microsoft technology. As we said before, we see some challenges, but we see great opportunities on focusing on B2B SaaS startups. We believe it's a sweet spot for Microsoft to support companies in this industry. And we are excited to have players like SaaS Insider expand into this region. This is another signal that the timing is right, the timing is mature. We see signals of further growth and opportunities. We also launched recently an accelerator called GrowthX, where we have 6 corporates in the first cohort, for example, companies of the likes of Unilever, IKEA, Etihad, Akbank, and Accenture and KPMG. And this accelerator is very focused on corporate challenges. So we define the specific challenges with corporates, and then we recruit startups that either already have solutions for these corporates or have the capability to solve for these specific challenges. And we are in the middle of the first cohort. We will have 2 cohorts per year. So we will be excited, of course, to consider more SaaS startups that will be a good fit for the next challenges we will be able to share for the next cohort that is supposed to start in March next year. So we are very passionate about the ecosystem. We started our operations a couple of years ago here in the region. We are definitely seeing a lot of traction and a number of signals, whether it's from the government side, regulation, policy making, corporates, academia, ecosystem players, accelerators, incubators, investors, coming more and more together to provide that support network where entrepreneurs can thrive and build their businesses from the UAE across the MENA region. So it's been a pleasure to share some insights about the state of the SaaS go-to-market landscape here in the region, and share also a little bit more about what we do as Microsoft for Startups. We will also be able to share with you, all of you, the resources available that we have as Microsoft for Startups, the link that you could use to apply to our programs, our social channels. And I will make sure to stop here, so we have left some time for any of your questions, and also time for Sadna and the team then to introduce the next speaker and be on time in the agenda. Sadna, sorry, you were speaking to me because I cannot hear you. I really cannot hear you, Sadna. I think my audio is set up correctly because I was able to hear Chameli before. Cool. So I guess I will check the chat probably if there are any Q&A. Let me quickly check.
Hi, Roberto. Jumping in, because of the audio issue. So I've popped up a few questions. There's like two, one is from myself and there's one from Alex. So I'll start off with mine, which is on the stage right now. What is the traction of B2B SaaS in Middle East and Africa? Especially locally built SaaS startups, because I've seen Zendesk, jumping into Middle East, Freshworks, Zoho, everybody taking Middle East very seriously. But how about the local startups that's coming up?
Yeah, look, the traction that we see is in companies that already have a subscription offering. We see there has been a 50% year-on-year growth on SaaS when we talk about B2B only, and about a 10% on SaaS B2C only. Then, of course, we have been going deeper into analyzing the data. We also have PaaS, platform as a service or data as a service company, so the data is split as well about this. So we have probably another 10% distribution that is on PaaS, 6-7% on DaaS, data as a service, 2% on mobile app, and we have then subscription boxes, offline sort of things are another 12-13%. This is for companies that already have a subscription offering launched. There are companies that are planning to launch subscription offering that we have been assessing a little bit the market, and we see the highest interest is around the B2B with around 35%. And the rest is split across a SaaS hybrid model or subscription models and access to exclusive content as well as business models. The sectors where we see most of the traction for the companies that already have subscription offering, again, it's the highest one is EdTech, followed by e-commerce and fintech. So these are the sectors where we see most traction together also in the UAE specifically with a number of food tech and productivity solutions. That make the bulk of B2B SaaS companies that we see in the region. The current billing cycle as well is usually monthly for most of the startups that we have, B2B startups that we see traction with in the MENA region. And the second is yearly, then we have quarterly, but monthly is usually the the main billing cycle that we see used across the solution. There has been also Stripe coming to the region. So when it comes to payment gateways, Stripe has been gaining a lot of market share, and they also opened the local office in the UAE, so they are penetrating as well across the region. So taking market share from companies like PayTabs, PayMob, Checkout, of course PayPal, Teller, and Hyperpay and others. So in terms of monthly active users, so the volume of business of B2B SaaS startups that we work with, if they're already, in terms of monthly active customers, we see that most of the startups have monthly active customers less than 1,000. So probably more than a half of the B2B SaaS startups that we work with. So and then it's a sort of a distribution, right? So where we see there is still a relevant number, like around 10-11% of B2B SaaS that are in between 10,000 to 50,000 monthly active customers, and the paying subscribers follow this trend. With the highest percentage is less than 1,000 users, and again relevant numbers up to the 10,000 to 50,000 monthly active customers.
Yeah.
So this is a little bit about it. So I don't know if I've answered your question, but should give you a better idea of the penetration of the B2B SaaS.
Yes, that's super clear. So I'll jump on to the next question by Alex. I'll just try to put it on stage.
Mm-hmm.
Yep. Okay. I'm not able to do it. So the next question by Alex is that do you have to be part of do you have to use Azure to be part of the startup program?
Absolutely. Look, I will make it very simple. The short answer is yes, but let me tell you why. We don't take any equity for working with startups, and we don't earn any fees. For us, it's more an investment. So the way we look at it is we have a window of opportunity for about 2 years to work with a single startup and nurture them across the different pillars I shared before: tech, go-to-market, investor readiness, and community. Right. So the only requirement that Microsoft has is the startup that joined the program should work on Azure. Right. So that doesn't mean fully migrate your workloads, all of them on Azure if you're not on Azure already, because we basically live in a multi-cloud world, right? So probably it doesn't even make sense to have this conversation, in the sense that there are many clients that demand, especially in the UAE, working on Azure, also because we have so far the only player with local data centers in the UAE, for example, for now. But also because there is a lot of value in unlocking access to the go-to-market, right? So the industry expertise Microsoft has in specific industries, mentorship, and access to customers is unparalleled. And there are industries where Microsoft really is ahead of the curve and ahead of the game in knowledge, in mentorship, in access to markets and customers. Plus the global network and the partner network also, that can be a scaled motion or a scaled channel for many solutions, SaaS solutions that are aiming to go to market very fast. But of course, across all of this, the only incentive that the company has, of course, to be relevant, for the company to invest for 2 years on a single startup to do all of this, is the company being developing their solution on Azure, so that the broader organization, we can unlock progressively value across the broader organization.
Yeah. So I have one question finally here. So when you're filtering startups, what's the basic criteria that you take in? And I'll have the follow-up question once you give me the answer.
Sure. Look, we look at B2B and B2C startups specifically, but our main focus is B2B SaaS, because we have more value to unlock. Even if, of course, we work with B2B, B2C companies that are not SaaS only, but we work with companies that are post MVP, so they already have a product, so that we can plug more easily those companies into the value proposition that we are offering, right? So that means that we don't have a real offer for ideation stage to get to MVP, not yet. So we take post MVP products, startups that have tech component, that are building on the cloud, that are starting having traction or already have traction, and have at least one investment, whether it's angel investor investing or an institutional investment from a venture capital firm.
Yeah. So follow-on question, what's your take on funding being the main criteria for company getting the accelerator credits and stuff? Because I've seen a lot of your competitors do that. Because I'm a Microsoft Azure user, I'm a bootstrap company, I still got the support from your accelerator program, but it's not the same across the globe, wherein certain accelerator programs are basically within from your competitor side itself. It's basically like if you're funded, then you get 100,000 credits. But what about bootstrap companies? Like,
Yeah.
are we pushing, VC funding here, or
No,
are
no, no,
we
no,
not
no.
giving? No, no,
You
I'm saying, like, what's your take on this, that
Yeah.
most of the companies are following nowadays?
100%. So my take is that for us, funding is not the criteria, right? As we said, we look at either traction or funding. And traction, honestly, we look at companies that are about to have traction, right? So because our goal is to help them. So for us, is not a big criteria. Also because we know that in this part of the world, specifically in the MENA region, investors are in general risk averse. So they either invest in startups that already have revenues or someone else invested in them. So in general, so most of the investments are polarized between seed stage and pre-series A, series A. So for us, that's not a real differentiator, right? We also look at the potential that the company has and the potential of the solution, because we also have knowledge about what use cases, what scenarios, what challenges a lot of corporates are facing. So when we see that there is potential because there is not enough supply of those solutions in the market, then we know that we can start onboarding those startups early on, regardless of there is already traction or there is already funding. Right? So there are some criteria that are shared globally. I don't believe in the one size fits all approach from the US, especially to the rest of the world. So we have a degree of flexibility here. On top of that, we will be adding soon components of offering that will be targeting earlier stage companies that are before pre-product market fit and from idea stage on, with other more granular tiers of credits to start with, but also other value to unlock for earlier stage startups. Hello?
Yeah,
Yep.
thanks so much, Roberto. I hope you can hear me now. There was a bit
Yes.
of a tech glitch. Okay, thanks so much for your time. And as I said, it's a culmination at the right time. We have another question, but unfortunately, don't have time to take it. I will take it offline with you and get back to Vandana here. Um, Thanks, Roberto. Thanks once again.
A pleasure. Thank you, Sanna. Thank you, Chameli. Great, being part of the launch of SaaS Insider in the MENA region.
Yes.
Definitely happy to take any questions we didn't answer as a follow-up. Please feel free to share my contacts, and any resources I have, I will definitely make sure to share with your audience.
Definitely, and look forward to working very, very closely, like we do in India, and extend the same in the Middle Eastern region.
Likewise.
Bye bye.
Have
Thanks.
a very good day. Bye-bye.
Thanks, everyone.
Bye-bye.